Good morning, everyone. I'm Anne-Marie Band. Today's Thursday, October the 26th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We've got ourselves a pretty tidy sell-off, and remember yesterday I said, where do you have to step out of the way and stop picking the bottom is if we lost this 420, and my oh my, did we lose it. Be comfortable with these bounces that fade when you've got trend that's moving all the way down, right? And this was certainly the case into the close and earlier in the day at that noonish area coming into 420. Notice old old support becomes new resistance. And so that was that line in the sand. And then it came back down and lost the 420 once more. So how do you trade that? Remember, when it collapses, people are going to try and buy the dip because they're getting out of their short position. They're saying, hey, listen, I'm getting out of my short position, and the only way to get out of short position is to buy it. And they buy it up into the resistance zone. So watch that Keltner channel and then see, look at what we're doing. Every single little bounce is getting sold. People are trying to pick the bottom. They really are. But until we get up and over this 417 area right here, we're very likely to collapse, right? So if you're thinking to yourself, should I stay short? If you are already short, that answer is yes. You want to start trimming if it gets above 415. But this 417 area is a clear formation that says, hey, listen, if we can't get up over this level, we can increase our short size. If we can get up over this level, we could have ourselves a squeeze, and we've got no business being short in that space. Let's take a look at what's going on with the Qs. The Qs down, $3 in the overnight. Take a look. Support, support, support. Collapse. Now, if you're thinking to yourself, wow, I didn't get the bounce that fades. When you've got a trend like this, and sideways, 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 the fair trade is a short here, realizing that it could always come back and retest this 350 zone, which I actually anticipate that it might do. So when it starts bouncing sideways, 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 if you've been short on this break, then you need to take some profit here because it could reverse. Now, it could also keep going further down, right? But the key event is take some profit, lower the stop, and then, look to add back to the position if it comes in and tests 350. Where could this chart go? Well, if we look at the floors here, we've got a really big floor. I'm not really sure tech is going to do that. Our life is tech, but I don't know. Is the life really tech? I still got to eat. So I don't have any idea if it fades all the way down here, but my supposition is that this chart could easily give back a fair bit as pricing gets recalibrated over the longer haul. Take a look at this. I'm going to delete that, actually. But that really is a ledge that says, all right, from a weekly formation, I've got this 336, and I can see it over here. Maybe I'd do that on the wick. It's 334, somewhere around that zone, right? That's the next line in the sand. So it looks like we're repricing. Not to fret, folks. We can trade short, and then this is where we look for stocks who continue to hold up, right? One of which is remarkable to me, and that's how Microsoft is doing right here, right? Wow, this thing is really holding. Now, it's lost a few pennies. Actually, it's lost about $3, but it's still holding remarkably well compared to, the mighty Goog, which is now at 124, which makes our put butterfly just look fantastic. We just have to give it a little bit more room to see if it can fade into the deeper support edges. I would like to be able to cover this position at about the price action of 120, but we'll see. All right, so let's go to the ES. Chart trying to double bottom on the 15-minute, right? So what are you thinking if you're looking at this? If you're thinking to yourself, you know what? I could buy this dip. This is a scalp trade, and we're already at resistance. Now, last time it did it, it went all the way up to 41.87. You know how important I think this number is. It's been a number we've been looking at for, I don't know, months in terms of saying, hey, look at the floor. This is a region that is going to be battled. And so we could have ourselves a wide sideways slosh. So we've got a lot of news coming out. Durable goods, GDP, international trade, jobless claims. Wholesale inventories, not going to be too much of a big deal. And then tomorrow we've got personal income and outlays. We could have a swoosh down and then a big bounce up. We are fairly close to heavy congestion, right? This 41.27. We can easily bounce from here though. So be careful going short and holding short in this downward framework. All right? Be very careful. If we get above 41.87, more buyers will engage right up over the top here. And they're going to try and walk through and fill the gap all the way into 42.10 and some change. All right? That's what they're going to try and do. If not, we know what's next, right? Stair step into 41.55 and then 41.27. That's my suspicion. NQ. Today I will be on Sirius, business radio, chit-chatting about all and sundry. Taking a look at the NQ, same sort of thing. Look, support, it failed dramatically and held and then failed dramatically. And then resistance that breaches and holds with literally no wicks underneath here. So could we try to flatten out here? Why, yes, we could, right? Take a look. This is like an inverted head and shoulders pattern. Here is this area, the typical red dog reversal event. For those of us that listen to Scott Redler, the pop up here, and then the framework that keeps it heading to the north. Watch for the NQ to lift a little bit in my mind, because this higher low and the move into resistance tells us that we could have a push, and it is quite oversold. All right? Hey, listen, that's it for me this morning. We could talk about a ton of things, but do yourself a favor and just look at price and look at those last two candlesticks, whether you're trading a 15-minute. Now, if you're looking at a 1 minute, the framework changes a little. But 15-minute to 30-minute price, what has the last region done, right? What have the last two candlesticks done? So you can see here, hey, downward formation, higher low. You can look at this edge. I put this number up yesterday, 14,300. Bouncing off this zone, what's likely? Well, traders are going to come into 35 and go, maybe I'll take some profit there. If it breaches, then they'll go, maybe I'll take some profit at 14,360. That's been the sell zone so far, 14,360, 14,370. And so just stair step it up. And if you are looking at two downward candles and one upward, you know you're trying to retrace in an opposite current flow. So you look at the edges of those candles, old support, new resistance. I'm going to take my target. Prep yourself for what's going to happen. You see them selling it? Of course they're going to sell it. It's in a downward formation, and there is support, right? Could you say, hey, I'm going to sell it now? Absolutely you could. Absolutely. Where would your support ledge be to start taking profit? Well, you'd want to start taking profit at about 14,310 to 14,300 because you're building a higher low, okay? But we have news coming, and that could move things all over the place. All right? Take care, folks. I'll see you tomorrow.